Lovely. Right, good morning, team. Welcome to the 7:30 webinar. It is Thursday, and I think it is the 27th. It is the 27th of June. Andy on the mic. Hope you're well. Hope you've had a pleasant evening. Still nice and sunny and warm here in London, which is pleasant. Business as usual today. Any indicators, queries, questions you've got, please feel free to pop it into the chat box. We are going to have a look at a setup which is unfolding at the moment, so we're a little bit late on the entry, but plenty to talk about. A good example and quite a lot of topics to go over. So we'll have a look at that. So I'm going to get stuck straight into that. The reason I'm doing this and not looking too much at what's going on right now is it's just generally pretty quiet. Headlines wise, data wise, there's not a huge amount going on. And I want to just pull back. Yesterday, we talked about the potential impact for the Australian dollar off the back of the higher than expected inflation prints. And I just wanted to have a look this morning when I was going for the chart to see, has there been any follow through from that? I saw Aussie dollar had started moving higher again after the pullback yesterday. We're seeing a bit of dollar weakness this morning. So the opportunity for some of this Aussie positivity to start to play out. And I was just overhearing about the SNB, the Swiss National Bank, and knowing that they're largely more dovish. And I thought maybe there was an opportunity to try and look at some strength in the Aussie with some weakness in the Swiss. And the starting point for that was, of course, this data yesterday. So the inflation prints yesterday way higher than expected. There was sort of a 4 or 4.1, which was slightly lower than the previous, but then we had a 4.4, which was significantly higher, and then the headline print of 4, way beyond the previous and beyond the consensus. So inflation higher in Australia, and what's that started to push is the narrative, and it's brought in the potential for a rate hike from the RBA rather than holds and cuts, which we're seeing through a lot of the other central banks. And if we just have a look at the interest rate probabilities, and we have a look at the RBA, you can see how they're pricing here at the moment. So you've got a 60% chance of a hold and a 40% chance of a hike. So, that's pretty significant. 40% is not to be sniffed at. That's a high probability for a rate hike. And if we have a look at the current versus a week ago, you can see it has really shifted higher. There's a big difference in here. So we're getting towards the end of the year. We've got, what have we got there? About 25 basis points higher than we were. So this is very hawkish in here in terms of current versus a week where we were a week ago. And of course, that's been emphasized and escalated by the higher than expected inflation prints, which came out yesterday. Now, if we do a comparison with the SNB, so bearing in mind there, we've got 40% chance of a hike. Compare that to the SNB, they have got a 55% chance of a cut, only a 45% chance of a hold. So they are at completely the other end of the spectrum, starting to price way more probability of a cut. Of course, they've already cut interest rates, so no massive surprise with that. But compare it to a week ago, actually, we're seeing a 15 basis point move to the downside. So two completely divergent central banks here at the moment. The RBA looking to raise rates with a 40% probability that they do that, and the SNB sitting here with a 55% chance of a cut. So big central bank policy divergence between the RBA and the SNB, which should in theory drive some strength and some weakness in the relative currencies. And we've talked about the fact that we're risk on at the moment, equities are doing well, which supports that growth in the Aussie. So plenty of reasons yet again here for the Aussie to move higher, and the Aussie Swiss is going to make a nice pairing just with that central bank divergence. Now, if we come across to the chart, the reason I'm looking at this is I saw a price pattern, and we'll get down to that on a 30-minute chart. So looking at sort of a 24-hour hold, something like that. So I'm going to look at the daily, the 4-hour, and the 30-minute. Look for, like I said, a trade that will last around a day, something like that. And the starting point, therefore, needs to be on the daily. Okay, now I'm not going to do too much analysis on the daily, but I am just going to pick up some key support and resistance levels, and hopefully you can see this one running through here, daily time frame. Starting from the right hand side, it's the most recent support, broken here, but nice little kiss, and then resistance, and it goes a long way back this level. So strong resistance support level, which we're bouncing off down there at the moment. Looking up elsewhere, not a huge amount. Okay, the previous high Puts us quite a long way up here, and I don't think it's hugely relevant, to be honest. The more significant and the more relevant level is this one, because we can just see this previous support, resistance. However, the fact that it's the recent high and it's on such a high time frame of the daily, I'm probably going to give it, we're not going to be targeting that far anyway. We're only looking for a 24-hour hold here. So I'm going to give that high a little bit of significance. Okay. The only other thing that supports it up there was the round number of 61, which could also support the high. From a trend perspective, the daily here has now established itself in an uptrend. Now, I'm not, it's too high a time frame for the trade time frame I'm executing on. It's not that just because this is up, therefore I must be a buyer, but it is a good thing to see. Yeah, it is supportive. It does suggest higher highs, higher lows. This can, therefore, off the back of that, on a much higher time frame, go and push towards a new high potentially. Okay, so nice trend here being established. Good support and resistance. We've just come off of a strong support level, looking to continue to move higher. Now, if we then drop down into the 4 hour, okay, on the 4 hour in here, first port call, just repeat the process from support and resistance standpoint. I don't think there's actually a huge amount in here. This level doesn't look too bad. Now, part of the reason for that, I think, is the round number. Okay, 0.6 sits just here. You can see back in time it acted as good resistance. It was broken most recently here. I would argue that this level looks not too bad, just because it's where most recently we've failed. And also, I talked yesterday about looking for where's that strong aggressive selling. This big move to the downside grabs my attention, and that's a very small range. Whether you take that, you might treat that as a zone, that and up to the round number. Oh, why is that not working? There we go. Okay, that round number. It's a small zone there. Okay, it's only 7 pips, something like that. So it might be worth just saying that whole area. You can see it back in time here as well. Could be pretty good resistance. Support-wise, I think we've got a level, but it's right the way down here. Okay, and again, why am I being drawn to that level? Yes, back in time, there's numerous bounces, but more importantly than that, again, it's just the start of that really aggressive move up, which immediately grabs my attention. So, got some reasonable 4-hour support and resistance levels. Not a huge amount else, I don't think, going on through here. Dropping down into then the 30-minute. Okay, now you can start to see. So on that daily time frame, we had a very clear, strong uptrend, and now we've dropped down to these lower time frames. We can also now see that same trend. So I've got now a series of higher highs and higher lows. Now it gets a little awkward through here because the market goes very much sideways. Same rules apply as always for me. I need to see a close above the level, which happens there. Okay, get a close above to create the new high, the higher low, the lowest point between those two highs, and then finally, therefore, we're off up to here. Okay, so that becomes my trend, my series of higher highs and higher lows. Now I've got the daily time frame going along with now the lower time frames. Is there a trend line to go with that? There is. Now, in my opinion, it's not the best. Okay, everyone knows my negativity towards trend lines, but my rationale for this, it's good in terms of you get 1 bounce, a 2 bounce, a 3, 4. This is the 5th bounce off of this trend line. What I'm not a huge fan of is the fact that we've missed out this swing. Okay, I always like to draw trend lines with consecutive higher lows. Gives you a little bit more consistency, a little bit more reliability. But clearly people are looking at this, and they've got a desire to buy each time that we're bouncing off that level. And I'm just going to rewind this slightly. So decent uptrend. Too big to be a rising wedge. Yeah, way too big. If the pattern fills the entire screen, because if you draw a rising wedge, you're trying to draw something like this. If it fills the entire screen like that, it's just way too big. Rising wedge or wedges in terms of size on your screen, should really be something. This isn't a wedge. I'm just drawing something random to explain. Should be that sort of size. Yeah, so no, not a wedge in my opinion. Just a nice trend. Now, in terms of then any further support and resistance, okay, we've come down to this level here. So previous resistance here and here broke, became support once, became support twice. Okay, so that level looking pretty good. We've got further support down here. Again, we can see it's bounced, and then started moving higher. So strong support level. So from a fundamental standpoint, just a quick recap, we have got Swiss interest rates, 55% chance of a cut. Okay, that is dovish. Therefore, weakness in the Swiss franc. The RBA, 40% chance of a hike, 60% chance of a hold. So that is hawkish, which is strength for the Aussie, coming off the back of the stronger than expected inflation data yesterday. So the central bank divergence creates Aussie positivity, Swiss negativity, which is Aussie Swiss long. On the daily time frame, okay, we've bounced off the black lines here. We've bounced off a strong support level, and we have established a clear uptrend. On the 4-hour time frame, we haven't really done too much analysis here. All we've said is that there is a few support and resistance levels, resistance not too far up ahead. Then down to the 30-minute time frame, we've established a clear uptrend, so that goes in line with the daily trend. We've got a trend line, and we've got a couple of support levels. Everything we've discussed there so far is primary. Okay. So the question then came here. Now this was in the middle of the night, 3 a.m. It sounds then unreasonable to trade this, but of course this is the Australian dollar. So, overnight is its peak session. So it's not surprising really that this has happened. The point that we could actually be looking to take a trade was around 4 a.m., something like that. Okay, so now we're at this point here. What price pattern have we potentially got? What price pattern do we have here? Yeah, absolutely, Florence. Double bottom. Okay, so bearing in mind we're looking for opportunities to be a buyer here. Okay, we have got a failure once and a failure twice at that same level. So we've got a double bottom formation. The neckline will be the highest point between the two lows. Okay, so there's a temptation when you look at this chart to take this high here because that looks quite nice, but actually the highest point between the two is actually here. Yep, so that there would be our neckline, the highest point between the two lows. Okay, everything we have done here is primary. Support, resistance, trend lines, the fundamentals obviously, and then now the price pattern. What else could we go looking for here, which would be primary analysis before we start down the path of secondaries? What else could we do here from a primary analysis perspective? We've got trends, trend lines, support, resistance, price patterns. What else have we got? Yeah, we could check to see if there's a channel. So there's my trend line, so that's what we've got to check. So I'm going to take a direct copy of that trend line, bring it up. Okay, and we've got nothing in here, just the one bounce off of there. If I bring it lower, I could try and squeeze something in here. Okay, there's temptation to draw this. I've got one bounce here, 2, 3, 4 bounces. I'm actually inclined to say that's not too bad. I'm not a huge fan of the fact that we've cut off so much price action here. I think if you start doing that, life might get a little bit subjective. So personally, I would actually rather say no dice, just because I'd like to have seen it up here, getting multiple bounces. So I don't think there's a channel. Yeah, candles, absolutely. Now, we said at the start that we're executing this on a 30-minute time frame. The reason I'm executing it on a 30-minute is because that's the time frame when I've found the price pattern. Your price pattern gives you your entry level, your stop loss, and your target. Now, that is all execution data. So if you found a price pattern on a 30-minute, that's the time frame you need to execute on. You can't find a 30-minute double bottom and then, for instance, go down to a 5-minute to pull the trigger. That's not going to fly. Okay, so we've got a 30-minute pattern. That's what I want to trade. So therefore, it needs to be a 30-minute execution. So with that in mind, we're looking for a trade that's going to last around 24 hours. So I need a candlestick pattern that's going to have enough power to get me to my target. Okay, now the sentiment from a candlestick lasts for 9 events. So let me just close out this. The sentiment from a candlestick lasts for 9 events. Okay, so if I need something that's 24 hours away, a 30-minute candlestick is not going to cut the mustard. Okay, that's going to give me 4.5 hours of potential positivity. Okay, so if I'm looking at this support level and I say, oh, okay, well, there's a hammer here. By the time this moves, 1, 2, 3, 4, by the time I get up to the neckline of this double bottom, that candle's already going to have exhausted itself. So I need something a little higher. Now, if I go to the hourly chart, that's going to give me 9 hours of buying. It gets me closer to where I need to be, but it's probably still not enough power. Let's have a look and see what we had on the hourly. Hourly had a hammer as well. If I go to the 4-hour, that's going to give me 36 hours of potential positivity if I find the right candlestick. 36 hours is enough, right? I need 24 hours roughly for a 30-minute execution. So I come to the 4-hour chart. Okay, we can see as we break through the neckline, we have this big bullish engulfing. Okay, now it ends up, if you wait for that candle to close, you're going to end up being a little bit late on this. Now, what you don't also then want to do, you could say, well, I'm going to go to the 2-hour chart, and then that would give me 18 hours. That's basically what I need. Nobody is looking at a 2-hour chart. Okay, so even if it gives you a pattern, it's probably not got enough eyes on it to make it that successful. Okay, so try and stick to the major time frames. And I think in this instance, the 4-hour candle, the bullish engulfing, probably gives us the confirmation we need. And I'm just going to put in a little dotted line there just to highlight where the close of that 4-hour candle was. Okay. Fine. Right, back down to the 30 then. So let me just close this out. As you were doing your analysis, there's that blue line. That's where the 4-hour candle closed. Okay, so we've got pretty much all of our primaries covered. Now it's time for some secondaries. What could we go with? It's very much a trend-based trade, this, right? The daily is trending higher. The 4 hours not really doing a lot, but the 30-minute is trending higher. So yeah, RSI, OBV, moving averages, all applicable. Yep, absolutely. Okay, so let's bring in some of the big hitters. Personal favorite for me is the 100-period moving average. So I'm going to bring that in. Got the 100 here and the 200. Let's just change the color. 100 is, can't really see orange very well, can we? Blue I've already got. So nope, it's going to have to be orange. Let's make it a bit thicker. There we go. Okay, I'll tell you what I'm going to do. I think I should be able to hide the drawings here somehow. Bear with me. Hide drawings. I'm going to hide the drawings just so we can focus on the secondaries briefly. Okay, so from a moving average standpoint, okay, this is pretty much picture perfect. Okay, we are above the 100 and the 200, sign of positivity. Yeah, both of those moving averages are pointing upwards. Again, a sign of positivity. And my preferred signal, we also then have dynamic support coming from the moving average. Yeah, supporting the price, holding that price up. You can see it all the way through here, the 100 doing a very similar job. So that is excellent. It gives us extra confirmation on that level. So the moving averages have given us exactly what we wanted. Let's have a look at, I'm just going to go through a bunch of secondary tools. Let's have a look at the on-balance volume, another one of my preferred tools. Now, OBV typically works better on higher time frames. So a lot of the analysis we've done here has been on the 30-minute, but I would like to take it from a higher time frame. Can show again, what did you press to hide? I've been struggling with that. Yeah, on the left-hand side, you've got like, it looks like a little eyeball and a brush next to it. And you can hide indicators, hide drawings, hide positions, hide all. No worries. Okay, so OBV typically better on a higher time frame. So I'm going to bring myself out to the 4-hour chart. Again, what I want to be seeing on the OBV is as the price is moving higher, so too is the OBV, and we haven't got that here. Okay, this is not a good signal. Okay, you can see the OBV here is going down whilst the price is going up. Okay, so that is not good. That's not what we wanted to see. OBV here giving us not a good signal at all. In fact, a very bad signal. Now, personally, on Aussie Swiss, I'm really not too fussed. Now, the reason being, volume, in order to get accurate volume, the product needs to be traded through an exchange. Okay, FX is traded OTC, over the counter. Okay, it means that JP Morgan can ring up Goldman Sachs, do a trade for 100 billion, and nobody is going to have a clue that it's happened apart from those two banks. Okay, there's no central tally of it or anything like that. So it's almost impossible to get an accurate volume figure, okay, for currencies. And therefore, the OBV indicator here is highly unlikely to be accurate. So yes, it can be used in currency, but I think you have to take it with a bit of a pinch of salt. I'd much rather use it on something that trades through an exchange. It's why, of course, I put a huge amount of emphasis on volume profiling, market profiling. OBV I like as an indicator, and therefore it's no surprise that I tend to trade commodities, indexes, bonds, something that trades through an exchange. Okay, so the fact that OBV doesn't line up here, it's not great by any means, and you can still have some good signals, but it certainly would fall down the priority list if I'm trading a currency. Okay, so OBV has struck out there. That's not what we wanted to see. We would want to see OBV going up in line with the trend. So moving average has been good. OBV has been bad. Fib. Yeah, let's have a look at Fib. So let's bring the drawings back for that. The reason I'm bringing the drawings back is because we need to see our trend, our higher highs and our higher lows. Now for a Fib, we always go from left to right. In an uptrend, we go from low to high. Okay, so I'm going to come from this low up to the high. So we're getting a little bit cluttered. Let me turn off the 50, 61.8. Let's turn it blue. There we go. Okay, you can see the retracement here has been absolutely perfect, back down to 61%. So we went up, we moved back lower, we hit 61%, going with our trend line, with our previous resistance, which is becoming support. Yeah, no worries, Florence. So that retracement there has helped me to confirm, yes, this chart is likely to carry on going up now. Okay, so the retracement tells me where to get in. The extension is going to tell me where to place my target. So if I grab the extension tool, we're going to use a lot of the same reference points. I'm going to come from the low, which we were at previously, up to the high. Okay, same one we did before, but this time I need to do a third click. I need to come back down to the low, the bottom of the retracement. Okay, and that will then project my 100% extension. Now, the indicator means you have to click here, click, click. In reality, all it's doing, if I just measure this distance vertically, we went up this far. If we do the same thing again, that's where we're going to end up. Okay, so the indicator makes it a little complicated. In reality, just measure the distance it went, and if it's a healthy trend, we expect it to do the same again. That 100% then provides a potential target level. Where do you start the measuring of the fib can be subjective. Always go from the previous high or low. That's why it's so important to get your trends right. If you get your highs and your lows wrong, fibs is going to be almost impossible. If you get that bit right, fibs will take care of itself. just play dot to dot with the circles. Okay, so it's always previous higher low in an uptrend. All right, so that fib, the retracement, absolutely perfect. From the low up to the high, 61% retracement, in line now with the trend line, in line with the support, of course, the moving average, which was there acting as dynamic support. We've created a confluence zone now, which is got huge levels of support. Fibs, moving averages, support, trend lines, everything really that you could imagine at this point. Okay, so the secondary is now really starting to aid our cause and support us. Next on the list, somebody said RSI, so let's do that. Now, RSI in this instance, we're trying to go with the trend. So when it comes to RSI, what we're looking for is evidence that this downtrend, this counter trend, is coming to an end. I want to see the counter trend end to then continue going with the major trend. So I'm going to be looking for evidence that sellers are running out of juice. So let's bring in the RSI. Let's change it to 9, which is always my preferred. I think you'll find also, team, but if you are looking to reverse counter trend, this is a generalization, but you might need to go to a 9-period RSI. The 14 period is going to struggle to get itself into those oversold territories. Okay, so what have we got here? Ideal scenario, we would have bullish divergence. So as we had equal lows for the double bottom, we would have had higher lows on the RSI. Now, clearly we haven't got that. Okay, we have actually got equal lows on the price, lower lows on the RSI. We are oversold, but we haven't got bullish divergence. Stochastic is between 20 and 80. RSI is between 30 and 70. Yeah, so stochastic 80-20, RSI 30-70. So we aren't divergent. Now, some of you might say, well, I don't care. That's good enough. The fact that I'm oversold, I'm still going to take the trade. You know, personally, I don't think it's powerful enough. I think you probably do need the divergence. So RSI, we've struck out. What else have we got? What other tools have we got we could throw at this? Clearly, please, team, don't think this is a strategy. Don't just turn on every single indicator until you find something. I'm doing this purely as, educational. Let's see what signals we've got. Yeah, MACD, trending market, MACD. So MACD, actually, let's turn that off. Before I turn that on, who can tell me what I want to see? What should I see? If I'm going to buy this, what should I see here? What should I see? Buy signal below 0. Yep, absolutely. And that buy signal is what? You're absolutely right. So definitely below 0. And the buy signal is what? Yeah, on the MACD. Fast MACD crossing over slow MACD. Yeah, absolutely. The two lines crossing. The MACD line, which is the fast one, crossing above the signal line, which is the slow one. And all of that happening below 0. Okay, so there's the 0 line where the histograms merge, as it were, crossover. And there we can now see the crossover. Okay, the MACD line, the blue line, has just crossed above the signal line, the orange line. So we've got a buy signal on our MACD. Okay, lovely. There we go. Okay, so this setup really did have pretty much everything going for it. Do you change the inputs to the MACD? No, the defaults are fine, 12, 26, and 9. Yeah, I mean, you can tweak them if you want, if you think you've found some special recipe, but it's pretty tried and tested. I wouldn't worry about that too much. Yeah, no divergence, Florence, absolutely. So that would have made this signal stronger again. So we haven't got divergence on any of the oscillators, but we have got a buy signal. This then comes down to, of course, how much confirmation do you want? and I can't answer that. That's going to come down to your personal psychology, how many trades you're looking to take. You know, I would argue that there's enough primary evidence in this, but the fact that I don't have divergence shouldn't be enough to stop me taking this trade. I should still want to take this. I've got the fundamentals are right on side. It's perfect. I've got a price pattern. I've got a fib. I've got the moving averages. I've got a good trend. I've got good support resistance. I've got a trend line. I've got MACD. Yeah, I think I've got a candlestick. I think there's plenty in there to want to take this trade. The fact that there's not divergence, if you sat there and said divergence is the best signal I've got and I must have that, then absolutely fine, all power to you. But I don't think in this scenario it's required. I was looking to compare the EMA 50 and crossing EMA 20 with MACD. Was wondering if the default MACD is the right one. Yeah, so MACD is calculated from the 12 and the 26 moving average. You could change the MACD to a 20 and a 50 if you wanted. Yeah, just see how that goes. But yeah, it's 12 and 26 which MACD is calculated from. Okay. Now, of course, once you've got to all of this, it then just comes down to a matter of execution. Opportunity one is break through the neckline, stop loss beneath the low, beneath the fib, beneath the trend line, beneath the support level. It's effectively a one-to-one basically, back up towards that previous high. Option two is to say to yourself, as I think Florence mentioned, the Fibonacci extension is to say to yourself, you're going to use that extension from the low to the high, back to the low to set your target, which would be the 100% up here. Now, you can't blindly target that 100%. Okay, it's a secondary level. You need to do some due diligence. You need to go back in time and just see, is there any relevance to that level? And I would say minimal, very minimal. There is a little bit here, a little bit here. Most recently, it's been broken numerous times, so it's certainly not great. But the nice thing with it is shy of this level here. Okay, so you'd think, right, well, you are within some next resistance. Okay, so it's not over ambitious. If the fib extension, for instance, was up there, you shouldn't target the 100 because you've got a level just there. Yeah, so the fact that the 100 extension is beneath that resistance gives me a little bit more conviction to it. That then turns this into a 2.5 to 1. I'm going with the trend, so personally I'd be quite happy to be a bit more ambitious and go a little bit further. Generally what's going on at the moment, this is where we are, this is live, so like I said, we are a little late to this. Really this broke out 5-6 a.m. this morning, but we're just picking up some speed. We'll see how this progresses. Can you still take this trade? I think it's difficult now, probably too late, but it was just a nice example really where the fundamentals and the central bank policy has determined which asset you have a look at, and then the technicals have helped confirm your entries and your setup. Okay, lovely. Well, there we go. Aussie Swiss, I think, was a good opportunity. I think Aussie across the board still stands as a good opportunity as they're looking to hold. I think some Aussie strength still makes sense. Let's just have a look at the Aussie dollar range, which we've had our eyes on for a few days now. We're still within it. We're still not anywhere near the high. So it's still a waiting game on this one, but time will tell. Other things we looked at yesterday, just quickly, oil did not do the job. Oil, that ascending triangle which we were looking at, just broke out the bottom, never got triggered. No viable trade there anymore. Unfortunately, that pattern which looked good has not come to fruition. Euro dollar, which we had our eyes on, did make its way down to target. It's just found the bottom of this range and is bouncing a little bit, but not too much. So that one's kind of all over. And then Nvidia is just messing around really. It's not doing a huge amount. Still want to buy it. Still want to buy. I don't think anything's really changed there for me. Just not a lot going on. Alrighty, lovely. I'm going to call it quits there then, team. Have a lovely day. Enjoy yourselves. Happy trading. Good luck. It is going to be I'm going to say market midday. It is market midday. Tune in for that one, and I'll catch up with you all soon. Bye for now.